Hey everyone, welcome back to Corporate Decoder. ARGENX SE ARGX just filed a 6K report, and I'm seeing some interesting moves in their financial disclosures. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its first half, year financial results, and there are some key figures that tell a story about their progress and future. This filing is essentially a way for ARGENX S to share important updates with the US Securities and Exchange Commission, and it is happening for the month of July 2026. The big news here is that they've released their unaudited financial results for the first half of 2026, covering the period up to the 30th of June. These results are presented in a press release, an interim report, and an investor presentation, all of which are attached to this filing. Now, let's dive into what these numbers are showing us. We're looking at financial results from the first half of 2026, and they've also provided context from previous periods like the end of 2025 and 2024. One of the most significant areas we can look at is the equity section. For instance, at the end of 2024, the issued capital was reported. This is the money the company raised by selling its stock. We also see share premium, which is the amount investors paid above the initial stock price. Retained earnings, which is the profit a company has kept over time, is also detailed. Looking at the issued capital, we see it reported at the end of 2024, and then it is also reported for the interim periods in 2025 and 2026. This tells us about how the company's ownership structure is evolving. Similarly, for share premium, we see figures reported for various dates. This gives us an idea of how much investors are valuing the company's stock when they buy it. The retained earnings figure is crucial. For the period ending the 30th of June 2026, we see this number. Comparing it to previous periods like the end of 2025 and 2024 can tell us if the company is becoming more profitable and reinvesting those profits back into the business. For example, here is the retained earnings for the period ending the 30th of June 2026. The total equity attributable to owners of the parent is a good summary of the company's net worth. We see this reported for different periods, including the 30th of June 2026. This is the real value of the company belonging to its shareholders. The report also mentions investments in equity instruments measured at fair value through other comprehensive income. This relates to how the company accounts for its investments in other companies when their value fluctuates. Seeing these figures for different dates helps us understand how their investment strategy is performing. We also see something about term accounts. This could relate to specific financial arrangements or liabilities that have a set duration. It is reported for the 30th of June 2026 and also for the 30th of June 2025, which helps us track any changes in these long-term financial commitments. The reporting is done in euros as indicated by the currency code EUR. This is important because it means any fluctuations in the exchange rate between the euro and other currencies could impact the reported figures if operations are global. The filing details share-based compensation award tranche 1 and tranche 2. This refers to how the company compensates its employees and executives with stock options or awards, often spread over time in different tranches. Observing these figures for the first half of 2026 gives insight into their compensation strategy and potential future stock dilution. We see information related to stock option plans, often broken down by different groups like non-executive directors and directors. Specific grants, like the 1st of January 2026 grants, are also mentioned. This shows how ARGENX SE is using equity to incentivize its key personnel. Restricted stock units or RSUs are another form of stock-based compensation. The report provides data for RSUs granted in different periods, like prior to 2024 grants, a 2024-2025 grants, and the 1st of January 2026 grants, and also for the first half of 2026. This gives a detailed picture of their equity award programs. Performance stock units or SUES are also listed along with details about different executive groups. This suggests that a significant portion of their executive compensation is tied to the company's performance and achieving certain goals. The company also reports on rebates and chargebacks in distribution fees and product returns. These are important operational metrics that can impact net revenue. We see these figures reported for the end of 2025 and the first half of 2026. A rise in chargebacks, for example, could indicate issues with product delivery or customer satisfaction. There is also segmentation by country, including the US, Japan, and China. This shows how their revenue and operations are distributed geographically, with figures for the first half of 2026 and 2025 detailed for each region. The rest of the world category represents their business outside of the specifically listed countries. This gives a broader view of their global reach. Interestingly, there is a mention of Halozyme Therapeutics Inc. and a date of the 28th of February 2019. This likely refers to a past event or partnership providing historical context. And finally, we see efgartigimod, which is a key drug candidate for ARGENX, linked with Lonza and Fujifilm, and reported for the 30th of June 2026. This highlights the progress and focus on their core product development. Looking at these numbers from a broader perspective, ARGENX SE appears to be actively managing its equity and compensation structures. The detailed reporting on various stock-based awards and equity instruments suggests a strategy to attract and retain talent, especially in the competitive biotech field. The fact that they are reporting on key drug development programs like efgartigimod in their financial disclosures indicates how integrated their business strategy is with their financial reporting. The geographical segmentation is also crucial for understanding where their growth is coming from and where potential risks might lie. The company is clearly focused on growth and strategic partnerships. The reporting of rebates and chargebacks alongside operational segments also allows for a deeper look into the efficiency of their sales and distribution channels. What I am actually looking for is how the reported growth in their equity and revenue translates into actual profits and cash flow generation in the long run. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this valuable, please like this video, subscribe for more, and join our Discord community in the description.